Some job reports come and go, but this one landed differently because it lines up with what a lot of Americans have been feeling lately. Hours cut, raises postponed, job opening drying up. You can sense things slowing down even before you see the numbers. And now the data confirms it. The US lost thousands of jobs again. That makes 3 drops in 4 months. And when you start seeing that kind of trend, life doesn't stay the same. Work doesn't stay the same. And money definitely doesn't feel the same. So for today, let's talk about what this means for you. Not just the big economic terms, but the real life impact on your budget, on your job security, and the choices you're going to be making heading into 2026. So let's start with what actually came out in this report. The US didn't add jobs this month. It lost about 32,000 of them. And when you hear that number, it's not just statistics. It's a sign that something is shifting. And it wasn't just one industry having a rough stretch. It's retail, transportation, small businesses, service jobs. Several areas all pulled back at the same time. It's one thing when a single sector slows down, but when multiple parts of the economic step back together, that usually means companies are being very careful. They're watching their spending, watching their demand, and trying not to take risks right now. And here's the part that most people feel long before the numbers come out. Businesses often make small cuts first. Shorter shifts, few hours, hiring freezes before they ever announce anything bigger. So this report isn't just about the 32,000 jobs that disappear. It's about the mood inside the companies right now. They're cautious. And honestly, a lot of people have been sensing for weeks. Now, here's why this report feels heavier than the ones early in the year. Losing job once is concerning. Losing job twice gets your attention. But losing jobs 3 times in 4 months, that tells you something deeper is happening. So back in late summer, things still were steady. Companies were hiring, hours were stable, and even if prices were high, most people felt like they were managing. But over the last 2 or 3 months, that tone shift, you could feel it in conversations with coworkers and how long it takes to hear back from a job application and how some businesses suddenly start filling open roles. So when this report came out, it didn't feel like a surprise. It felt more like a confirmation. And that's why this month hits differently. It lines up with what people have been believing. A slower pace of work, fewer opportunities, and a sense of companies are being extra careful as we move into 2026. This isn't about panic. It's about noticing the direction things are moving in and understanding why it matters. So let's talk about how this actually shows up at home, because the impact usually doesn't start with a layoff notice. It starts with the little things. Maybe your hours get trimmed a bit. Maybe the overtime you used to count on suddenly isn't there anymore. Maybe your workplace feels quieter. Fewer new faces, fewer job posting, fewer projects starting up. Those small changes don't always make headlines, but they make a big difference in how steady life feels. And when companies start pulling back like this, it affects more than your paycheck. People start holding off on vacations, big purchases, home repairs, not because they're panicking, but because something in the back of their mind says, let me just be careful for a little while. At the same time, borrowing costs might start shifting if the Federal Reserve reacts to the slowdown. That could eventually make mortgage, car loans, or even credit cards a little easier to manage. But those changes don't happen overnight. So what you feel first isn't a big announcement. It's the day-to-day adjustments. Your budget is stretching further. Your spending becomes more thoughtful. your plans become a little more cautious. That's how a job report works its way into your real life. Quietly at first, then all at once. If you look back over the last couple of months, you can see how we ended up here. It didn't happen all at once. There were small signs building up along the way. Companies started slowing down their hiring. Some pulled jobs posting after a week. Others stopped replacing people who left. Teams that were growing in the spring suddenly froze in places as the year went on. And then the layoffs started. Not huge mass layoffs everywhere, but steady announcements from different industries. Tech firms trimming a few hundreds of workers, retail chains closing underperforming stores, transportation companies letting people go as demand softened, and smaller businesses quietly reducing staff because their budgets weren't stretching as far. Individually, each announcement sounds manageable, but hearing them week after week paints a different picture. You also hear people talk about missed promotions, projects being pushed back, and raises that were supposed to happen but didn't. None of those things are dramatic by themselves, but when they show up together for 2 or 3 months straight, it usually means companies are preparing for a slower stretch ahead. And that's exactly what this new job report reflects. It matches what people have been sensing. More cautious, fewer openings, and a job market that doesn't feel confident as it did early in the year. Put all that together, the layoffs, the hiring freezes, the lighter schedules, and you get a clearer view of where things are heading. The economy isn't falling apart, but it's definitely cooling down. A period where businesses pull back, families become more careful, and everyone tries to move through the next few months with more awareness. So where does all this leave us as we head towards 2026? Based on how the last few months have unfolded, there are a few things that we can expect, or at least prepare for. The job market may stay soft for a little while. Not a collapse, just a slower pace. Companies might continue to be cautious with hiring, and that means job openings could take longer to fill, and a few new positions might show up. Raises might also be harder to come by. When businesses get careful, they tend to hold off on increasing payroll costs. The Federal Reserve could step in with a rate cut if the economy keeps losing momentum. They try to keep things steady by lowering borrowing costs. That could help with mortgages, car loans, or even credit cards, but the effects come slowly. Prices may not drop, but the pace of increases could ease a bit. And we may see more small layoffs here and there. Companies are staying lean until they feel confidence again. So the most realistic view of the early 2026 is this: a cooler job market, steadier prices, and an economy trying to find its balance, while households adjust along the way. With all this happening, what can you actually do to stay steady? Start by looking at your monthly essentials. Not to stretch yourself out, but you know exactly what you need each month. If you have higher interest debt, this is a good time to make a plan. Even a small changes now can give you more breathing room later. Pay attention to small changes at work. A lighter schedule, project delay, co-workers not being replaced, those things shows up long before official announcements. Try to build a little cushion if you can. It doesn't have to be big. A bit set aside each month can make a real difference. And remember, slow periods don't last forever. Opportunities return. Companies bounce back. Your job is simply to stay ready, not anxious. Just prepare. Small steps now can make the next few months feel a lot more manageable. As we wrap this up, here's what this moment really means. A job report is just a snapshot. But the feeling people have right now, the uncertainty, the cautious, the quiet workplaces, those are real. 3 drops in 4 months tell us the economy is moving to a slower phase. And a lot of families are already adjusting to that. So you don't need to expect the worst. You just need to stay aware and make choices that protect your stability until things pick up again. And that's why we talk about these reports, not to overwhelm anyone, but to help you understand what's happening so you're not caught off guard. So whatever 2026 brings, you handle it the same way you handle everything else, one step at a time, making the best decision you can for yourself and the people you care about. Thank you for watching.